It actually seems to be a pretty decent relationship between movers, market share, and GDP growth.
Kia ora, and welcome to New Zealand Property Market Podcast, brought to you by Cotality for the 23rd of February 2026. I'm Head of Research Nick Goodall, and today I'm joined as per usual by Chief Economist Kelvin Davidson. Kelvin, I think we can reflect on Wednesday's monetary policy statement and the reaction from it shortly. But first, let's go over our latest monthly chart pack, which was released last week, starting off with the sales volume tracking for January. Obviously relatively weak on the face of it, but you've got a bit of a theory as to why that might be.
Yeah, well, I mean, it's nothing more than a theory. I don't necessarily have much to prove it with, but a timing issue. I wonder if there's some sense here that people pulled a few transactions forward into December. So what we did see a pretty strong growth rate in December when you look year on year. It did stand out a little bit, so quite a spike's maybe not the right word, but an acceleration in growth in December, which looked a little bit odd. And then roll forward to January, and we've got a weak result for January, which also looks a little bit odd. So it was up sort of 20-25% in December and down about 10% in January. So it looks, now this is not seasonality because we're doing a year on year change here. So it's more about a timing thing, an odd event where people pulled a few deals forward and it sort of hollows out the following month. I think maybe that's kind of what's gone on. You kind of get that sense from looking at a few other data indicators as well, particularly the Reserve Bank lending figures. They were remarkably strong for December, and I just wonder if when we get those for January, they'll also be a bit softer. So I guess, long story short, if you smooth it out, you sort of average out those growth rates, and actually December looks a bit stronger than normal, January looks a bit weaker, but I think it's probably just a timing thing. Take the 2 months together, and actually that sort of upwards trend is still there. So, well, I mean, we'll see what happens in the February data, I guess, but I think I'd be fairly confident, I guess, that there's a bit of a timing issue in there rather than sort of the start of a new weaker trend or anything like that. So yeah, that'll be something to keep an eye on. As I say, probably only a theory, nothing really to back that up, but it is a bit of a gut feel, I guess, based on having done this for a while.
Yeah, I think it makes sense, right? Like, certainly jumped out to me, but then, yeah, once you mentioned that, I think it absolutely made sense. As you say, if you take a few months together, the last 3 months, which is the main chart we kind of put together to get rid of any of that monthly volatility, sales over the last 3 months are up 6.1%. So I think that's a much, more robust measure and shows that, yeah, basically continued on. I think your point's right. We talked about December's crazy lending data in terms of bank switches, so that wouldn't affect us, of course. That's just people switching their mortgage between banks, not buying any property. But we also did note that the amount of lending done for new purchases did increase as well. Now, it probably got lost in the wash because so much lending was done through bank switches that even though that spike was there, it wasn't as near as stark as the switching data. And so maybe it didn't get talked about as much. But I do wonder about, just the fact that there was a bit more activity happening. There was, and I think it was also worth mentioning that it was after that November monetary policy statement. It was a pretty clear signal that we would not see any more OCR cuts. So maybe that did sort of bring some purchase activity forward. People were like, I'm in the market, I want to get done before Christmas, so they sort of just, actually got into it. And rather than delaying that longer. And so it did sort of bring a bit of that activity forward. So I think it's a pretty sound theory. As you say, there's other data forms which have backed that up. So I think I'm certainly, welcome to go with that. Just in terms of a little bit of regional data before I pass back to you for the rest of the chart pack, I did notice that Tauranga was down 9% over the last 3 months, year on year. So in that same chart, all the other main centres were up over that 3 month period compared to the same 3 months the year before. Tauranga was down. Had a look into the detail of that, and actually for 8 of the last 9 months, their year-on-year change has been down. So we might have seen a bit of momentum fall away in that Tauranga market. I'd suggest maybe it's just that little bit more expensive. It doesn't have those same levels of first home buyers in that market either. And so if you see them as the driving force of many of these markets that are holding up or seeing transactions increase without as many first home buyers in that market, maybe that's seen things slow down there as well. So that was one just because it jumped out. All the other main centres are still up year on year. So I think that was an interesting one. Even that December it was up 1.9%. So 8 of the last 9 were down. December was slightly up and it was only just up. So yeah, definitely seeing a bit of a peak in transaction volumes in Tauranga, which is against the trend elsewhere, but maybe does show that some of those other areas might come to sort of an end in terms of the growth rates anyway. I'm not saying they're going to fall away or, that's all doom and gloom, but certainly that, that momentum, that strong growth that we've seen from the trough of the market, where 65,000 transactions nationwide have been increasing to 91,000 last year. We do expect some further growth to come through this year as long as those sort of economic forecasts, interest rate forecasts all come true. But just so it show in some areas where maybe affordability is more stretched, some buyers aren't quite as active, we might not see that growth continue on. So yeah, just a little mention, I suppose, there for one area that's bucking the trend, and certainly something to watch for as these next few months really pan out anyway. But yeah, sorry mate, to jump in there with a bit of detail. But yeah, anything else on the sales volumes from the chart pack release, or because buyer classifications included there as well, we can sort of wrap up the January data for who was active.
Yeah, I mean the chart pack covers a range of things. I suppose the not the best thing necessarily, but a thing that we can obviously do every month if we haven't talked about it elsewhere is to put buyer classification in. So probably, I see the chart pack as a guaranteed way of getting buyer classification out there each month, as well as obviously the home value index and everything else that's in there too. But we do talk about those things elsewhere. So guaranteed coverage of buyer classification in the chart pack, and so yeah, that's always the biggie for me. Yeah, movers activity was up a bit in January. We've speculating that it's possibly a seasonal thing, that there's always a tendency for movers to be that little bit more active in January. So really keeping an eye on the February numbers. Will we see that sort of fade back again as it has in previous years? I mean, continued sort of, I guess, well, what do you call it, kind of resilience, just tracking along for mortgaged investors or mortgaged multiple property owners, sort of just doing their thing really. There's some supports, but also some factors that people are definitely wary of there as well. And then, yeah, first home buyers, because of course these are market share numbers. If someone goes up, in this case movers, someone else has to go down because it must always equal 100%. So yeah, so movers went up a bit, first home buyers fell away a bit in terms of market share, but I've definitely been talking about how that's sort of might be a slightly smaller market share, but it's in a generally bigger pie. So there's still more first home buyers out there than there have been in previous years. So yeah, before sort of we see any media headlines about the death of the first home buyer, I don't think that's necessarily true. So yeah, that's kind of the numbers in a nutshell. I guess for me, yep, we might see movers fall back a bit in the February numbers, but you just start to wonder whether this will be something a bit more lasting, because I've been doing a little bit of work behind the scenes looking at sort of correlations across different things in the economy, and it actually seems to be a pretty decent relationship between movers, market share, and GDP growth. And so, it does look like now we're going to see a recovery in GDP growth. The economy will pick up. So based on past experience, we may well see that movers market share rise more sustainably. This might not just be a seasonal blip, as well as the fact that they have been pretty quiet for a while. So there's going to be some pent up demand where people are sort of bursting at the seams. Gee, we need that fourth bedroom or that office for working from home, whatever it is. You'd wonder whether a bit of that activity comes out, confidence recovers, economy's looking better, job security picks up, where we see that movers market share rise a little bit. It might come at the expense of first home buyers, maybe in terms of market share, but of course we can still have more first home buyers in a busier market. So yeah, I guess that's those. I'm keeping an eye on all the groups. I guess so. When I've been into the banks lately, it kind of feels like I'm covering all bases. I'll watch first time buyers, don't forget about them. But watch movers as well, don't forget about them. So it feels like we're talking about all groups. But I suppose yeah, if I was watching one group this year, it would probably be those movers, because that's where I guess they've been the quietest lately relative to their normal position. So it'd be interesting to see what they do. So yeah, that's all in the chart pack.
Yeah, I think that the movers have been really interesting, right? And that's that chart you talk about, which is essentially showing some strong correlation between GDP growth and movers market share. It's kind of quickly become my favorite ones, because I think it does talk about something we've mentioned for a long time, right? There's going to be pent up demand coming from these movers. Hasn't quite come true, but we always knew it was dependent on economic recovery, and that economic recovery has just taken longer, but they should still be there. I think, even look at the pay and gain report, the average hold period of people gaining or making money profit, had extended to its largest above 10 years. So again, I just think there's a number of things out there showing that people are staying longer. While there's uncertainty in their job and the economy, they haven't been moving at the rates they have previously. But when the economy improves, it's likely these people will come back out too, and that'll be confidence in what they can sell their previous property for, confidence they can get into that next one, confidence they can sustain mortgage payments for the next one. So it all makes sense. But of course, having it on a chart and showing, correlation, I think really rams home that point as well. So it's certainly one of my favorites of presentations at the moment, and still to me stands to reason. So I think we'll continue to track that one for sure. But yeah, it's certainly also mindful that January, for whatever reason, always seems to be a strong month for movers. And my hypothesis here, and look, there's not much to it in terms of, reasoning behind it or data behind it, but it maybe is just that, first home buyers hit a bit of fatigue by January. They're probably looking pretty hard towards that Christmas period. And then they just take a little bit of a break in January. Like if you're looking for a home, it's pretty exhausting. And potentially while you've had a little holiday, you don't rush back out there to look at open homes again in January. And so it just takes that little bit longer to get back out there and find out a property that's going to suit for you if you've been looking for a while and it hasn't really been working out. So don't know why, but honestly, you look at a chart monthly. We often publish the quarterly chart, and so you don't really see this as much because it kind of gets taken out of the detail when you put quarterly data out there. But you look at the monthly one, and there's a spike every January from my movers, and it generally comes what looks like at the detriment to first home buyers, which, as you say, they don't necessarily play in the same market, but as a share of all sales, it definitely does this little switch over. But by February, it moves back to whatever was happening prior to. So yeah, I do expect to see that. We'll wait and see if that is the case. That's my hypothesis for why it might occur. Even investors, maybe not quite as active, though they have ticked along. But yeah, maybe that's just it, that movers can take advantage of that. And I do think it's a really interesting one to watch for too, because if you think about that section of the market from a value range perspective that movers will be in, that's a part of the market that hasn't really been moving as much. We've probably seen more decline in that value of the market. I know this was in the chart pack as well. When those movers do come back out and they shift their old property, now it depends where you are in the country, but if you're in Wellington, maybe that's a $1 to $1.2 million property of your old house. You're moving up to a bigger, larger, better located property, whatever that might be, from the 1.3 to 1.8 or something. That part of the market hasn't done so well. So, if that starts to see some more demand, then it might see that market hold up and maybe even see some growth in it. And then does that start to take the rest of the market with it? So I do sort of feel like this is why I've got the strong connection between, market activity in the housing market, but also connected to the economy and the jobs market, because, it's going to take one to bring the other. And when they do, they'll sort of all grow at the same time. So that's kind of my firm belief at the moment. And sort of reiterating that in presentations, did one this morning already about that. And yeah, it's kind of just me trying to tie things all back together, which I think is working quite nicely. But yeah, that's probably all I'd add on the buyer classification side. And actually also a question I got was why is Tauranga suffering? I tied it back to that buyer classification. First home buyers aren't quite as active, mentioned it before. And so with that buyer group generally, driving the market, not doing so well, then we haven't seen that same growth in transactions in Tauranga. So yeah, sort of ties those two things nicely together from a chart pack perspective. But yeah, do go download that and check that out yourself. I'll put the link in the show notes anyway. And as per usual, if there's any detail missing or any questions you've got following from that, please do let us know. But Kelvin, I want to move to the economic data that was out in the last week or so. The main one I thought we could touch on was just that, the rental data that came out for January. And I think, there's also a bit of sort of the price indices data here. We also got some retail spend data out this morning, which was a bit of a conversation after I did my presentation this morning as well. It backed up. I saw Sharon Zollner speak before I did. ANZ discretionary spend data was showing that was actually increasing across the board towards the end of last year as well. So I think a few more stronger signs for the economy, particularly on that retail spend side of things. And then let's see what happens with rents. But yeah, any sort of other data you want to wrap up, or those couple of things you want to talk about. And then I just want to do a bit of a review now with a few days past of the monetary policy statement last week and any market reaction we saw off the back of that. I know we obviously recorded on Wednesday anyway, but yeah, we'll just sort of wrap that up. But take it over the economic side, and then we can fold into that official cash rate call.
Yeah, I mean, you've already covered off those sort of spending numbers. There seems to have been some better news there. I guess, we're watching every month that comes in at the moment and trying to build this more consistent picture. I guess what we're seeing at the moment is just for every more positive number, there's always a suspicion there's going to be a more disappointing one around the corner. So I suppose, yep, take it at face value. It's good news on retail spending, but yeah, we'll just have to wait and see what the next numbers tell us. And the only other thing I'd add is we got some property rents from Stats New Zealand last week. Their flow measure, or relating to kind of new tenancies, basically for rents in January. Interesting numbers. And so we're looking here at annual changes. In December, it was minus 0.3% nationally. In January, it was plus 1.6%. So I have my suspicions about that. I guess a little bit like the sales numbers. Maybe there's something a bit sort of funny going on in there. I do wonder about these rent numbers too. I don't think we're necessarily seeing a big acceleration in rental growth, or certainly not as strong as these numbers would suggest. I had a look back at the same time last year, and it can't be seasonality again because we're looking at annual changes, and there seems to have been a funny thing going on this time last year too. I don't know what. Processing of bonds or whatever, different types of property that are coming into the mix. I'm not sure, but I don't necessarily think we're going, like I say, I don't think we're necessarily going into a big new rental upswing. It doesn't feel like that's really the case, especially we've still got relatively low net migration. The level of rents is still very high in relation to income, so there's still a sort of tenant affordability restraint, which seems to be the bigger driver rather than sort of landlords' costs. So I suspect that plus 1.6% for January is a blip, and it'll fall away again next month, like it did this time last year. So we'll have to sort of test my theory on that in a few weeks' time. But yeah, I think that the long story short on rents is that it's still pretty flat out there. Certainly when you look at the MB bonds data, those numbers look quite a bit softer. Particular market like Wellington looks really weak. So yeah, I think you'd probably still call it a tenant's market for now, and that's, I guess, what we talked earlier about mortgage multiple property owners having some supportive factors, say lower interest rates, but also some restraints. One of those is the weakness of rents. You assess a rental property and you're putting it all into your sums. Well, gee, look at the rental income. That's flat to falling. That doesn't sort of fill me with confidence. So that's one of the challenges, I guess, that landlords are thinking about, or prospective investors are thinking about, alongside some of those supportive factors. So yeah, for now, for me, rents still look pretty sluggish.
Yeah, absolutely. And I think, we talked about property owners inching back into the market. They're not storming back. Things are better than they were a couple of years ago. But there are still those factors which mean it's not just an easy game anymore. You've still got to do those sums. You're still dealing with high costs. Rents aren't growing. It's all those factors that are just meaning, yeah, it might be better than it was a couple of years ago, when you couldn't write off your interest costs and the bright line test maybe kept some people away. Those things have been improved now, but it's still not, those finances don't stack up to make it an absolute no-brainer like maybe it did, 5, 10, whatever it is, a year ago, that see that level of activity really take off. So, yeah, I think that all stacks up as well. In terms of reaction to the official cash rate decision itself, the commentary from the Reserve Bank of the Monetary Policy Statement, the press conference from Anna Bremen, the governor as well. I also looked at some interest rate moves. One of the interesting things, and quite surprising, was that Westpac actually dropped some of their longer term rates, which was, not expected. I think the longer term expectation was still that, yeah, we're going to get to increasing interest rates at some stage this year. Longer term, that track could still look like it gets towards a neutral rate of, above 3% now. I think everyone's talking about. It might be 3.25, 3.5. Either way, rates are heading up, and those longer term interest rates you would expect to continue to increase off the back of that. I mean, 3 and 5 years away, I suppose it's hard to predict where things are going to go, but Westpac seem to have some confidence that, maybe the balanced nature, the patience the Reserve Bank are showing means that, they won't hike too fast in a longer term context, or certainly too far. We did expect it to be more at the shorter end. Those rates might come down to be more competitive, because I think one thing it did was reassert that, interest rates shouldn't go too far in the next 6 months. So, if you're doing a 6-month rate, then you'd expect things shouldn't shift too much in between now and that 6-month period. But again, the market hasn't really reflected that. So, yeah, continue to watch those interest rate changes, but they're all pretty minor anyway. And maybe Westpac have noted an opportunity to gain a bit of ground on some of the other banks with those rates. So fight for those longer rates when people are actually looking to really irk out every little bit they can get, and looking at those 3-year rates, as we talked about, I think it was last week, the proportion of lending being done on those higher fixed rates the longer fixed rate, sorry, has increased as well. So if you can play at that end, then maybe you can gain a bit of market share that way too. The other thing I think that was noted is also, just probably the broad general optimism of the Reserve Bank to forecast inflation to get back to 2%. I suppose, what else are they supposed to do? They need it to get back there, or that's their target, to be at the midpoint of the 1 to 3% band. So they're going to forecast it to get there. Whether there's genuine reason to think it will get there is maybe where the skepticism comes in. But again, maybe it's confidence in their own ability to actually make that happen. Of course, we can talk about the contribution of that and whether it's domestic or international. Of course, at the moment, we're still seeing those tradable or international factors doing the heavy lifting with dragging inflation down. The domestic ones, not so much. But hopefully those things are a bit administrative and can work through the system as well. And I suppose the other thing, which maybe I'll leave to you to talk about, is just this commentary that's coming in from them talking about the housing market and its role in driving the economy, and that's maybe changing quite a bit as well. But maybe you could pick up that thread and anything else that you sort of noted in the, what's that, 5 days since we got that release?
Yeah, I mean, it's a good point you make about the inflation projection in the monetary policy statement. It will always be going back down to 2% or heading up to 2% if it's starting below, because that's what they have to do. So they'll be engineering everything else around that to make sure that does happen, because that's their target, of course. So it'll always be reverting back to 2% at some point. But yeah, it seems to have been pretty well received, isn't it? There's Anna Bremen's had some good reviews, I guess, for what it matters, whether she cares or not, I guess. But seems to a bit of sort of positive commentary around her communication style. Seems pretty direct, and that was kind of my interpretation as well. It was quite easy to get a message out of that monetary policy statement. So that was good. And yeah, I think if anything, I don't check sort of swap rates every day or anything, but I think the markets have kind of reacted fairly positively to some of those longer term market interest rates. The wholesale rates have maybe come down a tiny bit. I think the New Zealand dollar's down a bit. So, I think it's just the sense that everyone's kind of just pulled back, take a breath, let's not get carried away. We may not see an official cash rate increase anytime soon. Let's just sort of, assess where we are and let things play out. So yeah, I think that's been pretty well received. The thing I guess I've picked up in the aftermath is just a few. I think she's done a few interviews and maybe even put out an article somewhere, sort of just picking up on this idea that we might not get a housing-driven economic upturn this time, which perhaps we've had in the past. And the whole sentiment picks up in the housing market and the wealth effect kicks in and people are like, yeah, well, it's all on paper, but my house is worth, 100 grand more. Sweet, I'll go out and spend a bit of money. And that's in the past kind of contributed to our early stages of economic upturn. It was quite clear from this last one and some of the commentary that they don't necessarily think that'll happen this time around. That we'll need other things to kick in, a stronger labour market, wage growth, productivity growth, these kind of fundamental economic things rather than sort of a credit-driven housing upturn. So that was quite interesting to see. Now, hopefully regular listeners will realise that that's nothing new. I mean, we've been talking about this very thing for quite a while now, saying things like, you can't get the shift to two-income households anymore. You can't have interest rates trending down anymore. Land supply, taxes might change in future. So it's felt for a while that we might be at a bit of a turning point for the housing market where it's not as big a part of kind of economic activity as it might have been in the past, and you see less capital growth in future, and so lots of different implications of all of that. But yeah, it was interesting just to see the Reserve Bank sort of come out quite clearly about that. Now, we might all be wrong, who knows, but it does feel like this could be a wee bit of a turning point where we might look back and say, yeah, house price growth at that point did sort of structurally change a little bit. So yeah, that's an interesting one. We'll only know in hindsight, 10 or 20 years down the track, but that was something that came out pretty clearly. And their forecast, as we talked about on that reactionary podcast, they've got zero growth this year for house prices. I think slightly further falls in the near term and then kind of balanced out with a little bit of growth at the end of the year. And then something like 3% growth in 2027. So really, you add that on to the 4 years we've already had of flat to falling house prices. It's quite a long old sort of U-shaped scenario we're looking at the moment. So yeah, it was interesting to see. And as I say, something we've been talking about for a while.
Yeah, absolutely. And yeah, I think we did touch on it last week, but yeah, that house price forecast from them was quite changed quite a lot. If you look at all the other forecasts, and they nicely have that published forecast from what it was in November compared to February between the two monetary policy statements, most of the other economic forecasts weren't that major different. But the house price one was clearly quite different, and you're absolutely right. It was that further decline this year when we're still expecting some growth to come in, sooner rather than later. But also it's been pushed back and pushed back and pushed back as we keep getting that, divisive economic data that says, yeah, it's kind of improved, but it's not runaway. The economy's better, but it's still not great. And I think that just keeps pushing back that influence or the flow through to the housing market as well. It was interesting this morning because in the presentation I did, and as I said, I watched Sharon Zollner from ANZ present before me, and she was sort of saying, this economy's trying to get going and it's kind of waiting on the housing market. And I'm going, well, the housing market's waiting on the economy. And so I think it's an interesting conversation, so depending on the angle you come at it from as to what needs to happen first to flow through. And yes, of course, falling interest rates, less mortgage payments, more money in your pocket, maybe the fact that people had, plenty of people switched banks and had 30 grand in their back pocket and spent that in retail in December, and that flowed through to the economy as well. So there might be a few blips coming up. But yeah, look, it's a bit of a circular argument right now, I think, in terms of which comes first and what happens next and what influence the two have of each other. But I think to your point, the main one is that maybe that connectedness has reduced because there are other key fundamentals of this housing market which are having a greater influence now, and it's not as simple as lower interest rates, more people go in there, get a mortgage, and boom, the housing market takes off the back of that. We are in a position now with affordability improved, particularly from a mortgage affordability perspective, where the settings are there for some growth to come back. And I think it was Sharon that first said a few years ago, or certainly was one of the ones that spoke about it the most, when does animal spirits take over in the housing market? And maybe there's still a chance of that happening, but it still won't happen to the same level or the same degree. But I do think that there is a chance that when things do start to show more positive signs, both in the economy, in the jobs market, and then in the housing market, you might see a little bit, maybe not the full FOMO, but you do start to see a little bit more competitive pricing going on. All you need is two buyers to want to buy a property, strongly, and suddenly they're fighting off and you get some upward price pressure. So I do wonder about that, right? That the Reserve Bank have pushed back their forecast for house price growth because that's just what keeps happening in the past, and it just doesn't turn up when we all expect it to. But it's one of those ones that might turn on a dime, and it just takes something to see that sort of switch and go again. And with affordability placed where it is, it doesn't feel like it would be too much right now for that to change. And, still going to be a bit of a fool's game to pick when that quarter or when that month occurs. And I'm still not expecting it to take off at 10% annual growth. Like, don't get me wrong, but I do just wonder if it happens a bit sooner than they expect, as long as those settings do continue to, perform the way they have, especially from an economic perspective, and some signs of the jobs market improving, because we had that lift in unemployment, but it was because more people were looking for jobs as opposed to lots of people being cut from their jobs as well. So, just reading a little bit below the headlines on those ones as well, I think is really important as to what the genuine health is, and then what that might mean for flow on through to the housing market. But yeah, look, it's an intriguing one. I'm sure we'll continue to read different responses from all the little different bits of data that come out as well. And I know we've got the NZAC coming out for January this week as well, so a pretty early sign as to how the markets come back from an economic perspective. So we'll talk about that next week, no doubt. But otherwise, that's pretty much it for wrapping up last week. In terms of other things on my mind, the monthly video is now live on our YouTube channel. So that's the kind of nice 5-minute package with a few charts there too. So do go give that a read. And we know many others sort of play it to their sales teams or their broader teams as well, just to sort of get on the same page. So go and check that one out. This week, we've also got the Women and Property report coming out later in the week, which I know you've written, and we'll no doubt do some media off the back of that one. So keep an eye out for that. Anything else on your mind work-wise this week, mate? Otherwise, I'm loath to review too much sport, but I will go there. So for Phoenix supporters like me, hold your hats. I'm ready to go.
Yeah, no, let's just get straight into that. No, nothing else to report.
Yeah, okay. Well, Where do I start? I mean, let's just start on a positive. The Canes, I went down to the stadium on Friday night and watched the Canes with their opening game, and saw plenty of tries scored. Ended up, I'm not sure I mentioned, but got a season membership for the Canes as well now. So I might just have to buy a season membership to the stadium, I think, and just set up a tent there. But I do enjoy my time down there, so certainly not complaining. Saturday night, of course, didn't go so well, starting off from that absolute howler from our goalkeeper. And, I do feel sorry for the guy who's just made some pretty bad errors, otherwise not a bad goalkeeper. And in the end, I suppose, what can we say? Another derby loss irks like anything. It hurts. It was embarrassing. But, to his credit, Chiefy has genuinely resigned. I think it had to come. It might have been taken out of his hands if he didn't anyway. Something had to change. I don't know if I said it to you on the podcast, but certainly after the previous derby, I remember leaving there going, I don't feel like this incarnation of the Phoenix will ever be this incarnation of Auckland FC. And so, my hope has now risen that I don't care who the next coach is, we're a chance whenever that next time is. And if I take a really optimistic view, if the Phoenix do make a run to the playoffs from here and get a bit of a new manager bounce, then there could potentially be a fourth derby this year if we finish in the top 6 and they finish in the top 2. You never know what could happen in that playoffs, and how good would that be, another derby under a new manager. So I'm ever hopeful. I will never waver, but it was tough work on that Saturday night, I tell you that much, mate.
Yeah. Oh, it sounds like it. I've certainly seen the aftermath of coach resigning and things. So yeah, onwards and upwards, I suppose. That's the thing about being a sports fan. You take the rough with the smooth, and there's always hope.
Yeah, exactly. It's the only way. And if I want to finish on another positive note, which is a very cynical way of looking at things, but of course the Crusaders yesterday afternoon did go 0-2 for their start to the season. So that did bring a little bit of joy to me. And I know people will say, but they lost an Australian team. Honestly, in the Super Rugby, for me, it's anyone but the Crusaders. So as cynical and petty as that probably is, I did take a little bit of joy out of that. So I know the Cantabs will come for me. But that's where I take my little bits of joy when I'm hurting from the Phoenix and any other team I do support that's not doing so well. So, yes, please leave me that one.
Yeah. It's too early for rugby anyway. I'm still in cricket mode. The best thing about that Crusaders Brumbies game was in the afternoon. It was a nice afternoon. Somehow if we could get afternoon rugby back, it would just make it so much better. I know it clashes with family lives and things, but it just feels like there's got to be something that could be done there. But anyway, maybe that's a pipe dream.
Yeah, I agree. I don't know how or why it came about. I mean, obviously there were 3 New Zealand teams that were home this weekend, so they had to spread them out. I mean, I suppose sometimes they put 5:30 on Saturdays maybe, which isn't too bad. But yeah, like I say, it's an absolute joy, and we've got the weather to do it, which has been actually okay since that storm, whatever that was, a week ago, and some pretty crap weather prior to that. The weather has improved, and yeah, great to see at least some way try and embrace that with some afternoon rugby, and yeah, certainly got plenty of tries out of it too. So I'm sure anyone that went and saw that one would have enjoyed themselves. If not the result, at least you saw some decent level of rugby going on, and plenty of tries. So yeah, to certainly accept that one. But that's pretty much us for today, mate. Anything else on your mind before we get on out of here?
No, that's it. Yeah, we'll get Woman and Property out there in a couple of days' time.
Yeah, nice. All right, we'll look out for that one. And Kelvin, I know you're coming up to LA on Friday, so I look forward to catching up and then grab a bite to eat at some stage too. So I look forward to that. But thanks as per usual for your thoughts and insights. Always great to catch up on our Monday mornings. And otherwise, let me just say thanks once again for listening. Please do get in touch with any questions or feedback. But that's all for today. My name is Nick. He's Kelvin. You've been listening to New Zealand Property Market Podcast. Mā te wā.